Thank you, Kritika. Good evening, ladies and gentlemen. We extend a warm welcome for this investors conference call to review the unaudited financial results of Q1 FY23. Niklesh Chaudhary, Executive Director, joining from online here along with me, other team members. The results of Q1 FY23, along with the presentation of highlights circulated already is with you for some time now, and we are sure that you would have gone through them. However, I would like to share with you some of the key indicators relevant for our discussion today. Q1 FY23 results, let me just give a review of that. The comparative performance of Q1 FY23 with that of Q4 FY22 and Q1 FY22 have been given in the presentation already circulated. Gross income in Q1 FY23 is 1,582 crores as compared to 1,348 crores in the previous quarter Q4 FY22, an increase of rupees 234 crores which is by 17%. Compared to Q1 FY21, gross income of 1,430 crores, there is increase of rupees 152 crores by 11%. The PBT is 100 crores in Q1 FY23 as compared to 121 crores in Q4 FY22, a decrease of rupees 21 crores by 17%, and compared to Q1 FY22 PBT of 99 crores, there is a marginal increase of 1 crore. The consolidated results indicate net impact of several factors such as increase, decrease in income, expenditure and exceptional items, etc., relation to feed and frozen divisions, which have been discussed in the following divisional performance of these units. Let me take up the standalone financial results of feed division for Q1 FY23. The gross income for Q1 FY23 is 1,311 crores as compared to 1,050 crores in the previous quarter of Q4 FY22, increased by rupees 261 crores by 25%, mainly increase in feed sale price during 21-22. The gross income in Q1 FY23 increased to 1,311 crores from 1,257 crores in the corresponding quarter of Q1 FY22, which increased by 54 crores by 50%, mainly due to increase in sale price. The PBT for Q1 FY23 is 77 crores as compared to 102 crores in Q4 FY22, a decrease of 25 crores by 25%. The PBT in Q1 FY23 has decreased to 77 crores from 93 in the corresponding quarter, a decrease by 17%. The decrease in PBT is due to increase in raw material prices. As you know, there are three major raw materials, fish meal, soybean meal and wheat flour, which significantly impact the raw material cost of feed. During Q1 FY23, the fish meal average price was 111 rupees per kg, went up from 94 per kg in Q1 FY22. The main reason appears to be ban on fish catch during May to July every year, pushing the prices upward. The average soybean meal price is 66 per kg during Q1 23 as compared to 65 in Q1 FY22 and 63 in Q4 FY22. Average wheat flour price also increased to 26 from 21 per kg during Q1 FY23 compared to Q1 FY22. However, of late, wheat prices have been going up steeply due to the Ukraine war, creating global shortage of wheat and increase in export demand for Indian wheat. The prices of wheat flour went up to 29 per kg, prompting the government to ban export of wheat from 13th May 2022. Presently, the price of wheat remains at 31 per kg, with even though the export ban has been imposed, still the prices are going up. The information is that there is a lot of stock available with the traders. Some sort of a hoarding is taking place. That's why with the traders this line pushing the prices up. Though we don't foresee much decrease in the prices, till the next crop, which will come only 31st March, after March next year. So we cannot, we don't foresee much fall in this price. It may hover around 29 to 31 rupees per kg. Increase in sale price of feed. In spite of increase in the feed price by 13 rupees 40 paise in FY22, 4 times increase, 2 rupees, 3 rupees 15 paise, 4 rupees 25 paise, and 4 rupees due to steep increase in raw material prices. The raw material cost increased by 15.10 paise per kg, leaving a difference of 1 rupee 63 paise unabsorbed. However, in course of time, the prices of fish meal, soybean meal, and wheat flour are expected to stabilize with a marginal decrease due to actions initiated by the government in the sector of soybean meal and wheat. Coming to the shrimp processing, Q1 FY23 results. The gross income for Q1 FY23 is 273 crores as compared to 300 crores in Q4 FY22, a decrease by 27 crores at 9%, mainly due to ROD-TEP income of Rs 16.29 crores pertaining to 15 months period recognized in Q4 FY22 and decrease in sales volume by 8%. In Q1 FY23, ROD-TEP income pertaining to the quarter was recognized as compared to ROD-TEP income of 15 months in January to March 22. January 21 to March 22, recognized during Q4 FY22. The gross income in Q1 FY23 increased to Rs 273 crores from 175 crores compared to corresponding quarter Q1 FY22, an increase by 56%, mainly due to increase in sales volume by 33% and recognition of ROD-TEP income of Rs 7 crores for the quarter April to June 22, 3 months. The PBT before exceptional items for the Q1 FY23 is 30 crores as compared to 21 crores in Q4 FY22, an increase by 9 crores, represents 43%, mainly due to decrease in raw material cost. The PBT in Q1 FY23 is Rs 30 crores, increase from 12 crores in the corresponding quarter Q1 FY22. The PBT in Q1 FY23 of Rs 30 crores is inclusive of 7 crores of ROD-TEP. The status of recall of products by frozen division. As you are aware, the company had to recall some of the consignments of cooked shrimp products in June 21 initial and August 21 expanded, found to be with salmonella contamination by US FDA and CDC in the recalled products. The recalled products are not allowed to be brought back to India and they have to be destroyed in the US itself. As a result, the company is liable to compensate US customers for recalled products and related expenses of destruction charges, etc., to the extent of the products returned and destroyed. The company is also liable for reimbursement of medical and related expenses to the consumers who fell sick and underwent treatment after consuming the recalled products. The present status of termination of recall and reinstating green list status is, I am happy to share with you that the US FDA has communicated the termination of recall on 25th May 2022, paving way for focusing on value-added products, enhancing the share of cooked products exported to the US. Company has filed petition with US FDA for removal of import alert on import of cooked shrimp products from the company as recall has been terminated. The company's petition is under process with FDA. I would like to assure the stakeholders that your company gives utmost importance to food safety and compliance with global regulatory requirements and leaves no stone unturned to achieve this objective. Insurance coverage. The company has product liability insurance covering the medical and related expenditure mentioned above. However, there is no insurance coverage in respect of reimbursement of products returned and destroyed and also other related expenses such as product restriction, call center storage expenses, etc. This cost has to be met by the company. The company has made provision in the financial statements in respect of the liability for the returned products. In Q1 FY23 accounts, the provision has been made for a sum of 5.30 crores as an exceptional item towards the value of returned destroyed products and other related expenses on actual basis as against 4.10 crores during Q1 FY22. The status of provisions made in the financial statement so far on this liability and payments made against the liability as on 22nd is total provision made including the above 5.30 crores is 32.80 crores, less claims settled and paid 17.55 crores, balance outstanding in the provision made is 15.25 crores. The above provisions in financial statement has been made on the basis of information received from the overseas customers from time to time, subject to specific verification of the specific claims by the company. And the payment is being made as and when the specific claims are received from the customers and after verification by the company. Since more than 1 year has lapsed since the recall was made in June and August 2021, the company presumes that further claims may not be received and may not be there in a significant manner, and the total liability will be to the tune of only about 33 crores, for which the provision has already been made. The product liability claims. As regards to claims for body injury caused by the consuming company's contaminated product under the recall, the company's insurer, New India Assurance Company, has appointed a surveyor for processing of the claims. So far, the company has received 13 claims towards bodily injury, which have been forwarded to the insurance surveyor for processing. The total claim from 13 claimants is about $1,53,261 US, out of which 17,523 has been directly settled by the company, and the claim has been made by the reimbursement, from the insurance company. The balance claims are under scrutiny by the surveyor, insurance company, and also the audit team of the company. Since the liability has been covered under the commercial general liability insurance policy, no provision has been made in the financial statement for this product liability claims. Industry overview. Future outlook is the recovery from the impact of COVID, which affected global economy during the past 2 years, has significantly improved, which is perceivable in growth of the global economy. We notice that the performance of calendar year 2021 was much better than the calendar year 2020, and it is expected to be still better in calendar year 2022. As I shared with you in the previous Q4 FY22 review, I had stated that companies are envisaging significant improved performance in the calendar year 22, as the first season of the shrimp culture had started with a highly encouraging environment, and the farmers commenced stocking in early February and March 22 in a big way compared to the previous year's first season. But at the end of Q1 FY23 in June, the production of the shrimp during the quarter was not to the anticipated level due to excessive rains, disease in some areas, and not so encouraging farm gate prices for bigger size compared to smaller size shrimps, resulting in farmers resorting to early harvesting. The company estimates that India would be able to produce about 8 lakh metric tons to 8.5 metric tons of shrimps, with an estimated consumption of about 12.5 to 13 lakh metric tons of shrimp feed. So the shrimp production and feed consumption in FY22 and company plans for FY23 shrimp feed consumption in India increased to 12 lakh metric tons in FY22 as compared to 10.50 lakh metric tons in FY21. It is expected that the consumption would further increase during FY23. The company's feed sales during FY22 was about 5.4 lakh metric tons as compared to 4.73 lakh metric tons in FY21. It is expected for FY23 that FY23 would be around 5.70 lakh metric tons, an increase of about 6%. The company expected to maintain its market share to 48 to 50%. As the demand for shrimp feed is expected to increase, the company has completed setting up of a new shrimp feed manufacturing facility in Bandapuram with annual installed capacity of 1,75,000 metric tons with a capex of 125 crores. The plant is ready in all respects, awaiting certain governmental clearances. The new facility is scheduled to commence commercial production in September 22. Coming to shrimp processing, shrimp production and export from India increased to 7.5 lakh metric tons in FY22 as compared to 6.50 lakh metric tons in FY21. It is expected shrimp production would further increase to 8 lakh metric tons to 8.5 lakh metric tons in FY23, an increase of about 13%. The company's shrimp export during the financial year 22 was about 12,836 metric tons as compared to 11,518 metric tons in FY21. It's expected for FY22 would be around 14,500, an increase of 13%. Avanti Frozen is in the process of expanding pre-processing, main processing and cold storage as detailed below. Pre-processing facility in Gopalpuram, adjacent to the existing processing plants, completed and awaiting final approvals to start pre-processing capex with a capex of 11.40 crores. New cold storage at Eravaram processing plant with 2,000 metric tons capacity. Work is in progress and the estimated cost is about 17.60 crores. The third one, new processing plant and cold storage in Krishnapuram, district with 7,000 metric tons per annum capacity. Land acquired, civil works to be commenced. The estimated cost is about 50 crores. With this, I would like to conclude with a positive note that the aquaculture industry is poised for a relatively improved performance in 2022 compared to 21. With this, I'll now would like to take up the question and answer session.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. I repeat, ladies and gentlemen, if you have a question, please press star and 1 on your telephone keypad. First question comes from Aditya from Purnartha. Please go ahead.
Aditya.
Mr. Aditya had withdrawn the question, so I'm moving on to the next question. Next question comes from Trilok Agarwal from Diamond Asia. Please go ahead.
Good evening. Thanks for the opportunity. I could not understand the reason for not so strong growth in the shrimp feed business in the quarter gone by. And could you also talk about any inventory, sort of high cost inventory that you guys had, and that had an impact on the margins in the Q1?
See, as I explained while giving the performance review, that the expectation was very high, in fact, for this quarter, because the April, May, and June, they normally the main season, and at the beginning, the climatic conditions and the price and everything was very good, and it was started in a big way. But somehow from May onwards, there was excessive rains. So it was something like early monsoon, and a lot of floods and all were there. And some parts had the diseases also. And also the other thing was, see what happened, the prices of the big size shrimps did not went up, they did not go up as expected, while the small size shrimps price were very good. So some of most of these farmers resorted to early harvesting, so that they get a better price margins, because as you grow bigger size, the prices were not attractive. So they resorted for that early harvesting. All these put together, though it started well, our expectations were high. The actual sale of feed was less by maybe 10 to 15% than what we expected. So, however, the positive again is that now the prices are very good. Now the farmers are very enthusiastic to start. So those who have resorted to early harvest and all, they have already started stocking is going on well. The indicator is that our starters are moving very fast, going now that, and we expect that this second season, normally it will be lesser than the first season, but if the conditions are good in the second season, that is now, see August, September, October, by October we should be able to get a good crop. No, it will be better than corresponding quarter of the last year. That is Q3, and it will be very good. That's what we are expecting. Q2, Q3, it should be a better production compared to the previous year. Overall, see, the one thing is very clear, that because of the early season there were some shortage in the total production and consumption. That will be made up to some extent in the second season. Overall, we expect that last year we did about 5,40,000 around that. So we expect that it will be around 5,70,000 or 80,000, which we thought that we would be able to go up to 6 lakhs. That's what we had estimated, but it may not be possible now, because the rest of the year, next 4 or 5 months, whatever consumption taking into account, we should end up somewhere around 570, 580. That would be a reasonable estimate for the rest of the year. That's what it is. That is the reason.
Okay. Thank you for the detailed answer. And just your comment on the margins about the inventory that you had, or was there any sort of high cost inventory you're carrying for the soya meal and the wheat flour?
See, the soybean meal, I would just share with you, the present the fish meal price is around 102. See, it came down a little, it went up, but so now, because from August, September, we are expecting that we should be able to have more catches, fish catches, so it will stabilize around. In any case, we don't foresee a much fall. It will be around 96, 97, is less than 100. We would put it. That would be a reasonable, estimate of the fish meal price for the rest of the year. That's what we are expecting. Around 96, 97 should be the stable price for the rest of the year. Coming to the soybean meal, it is around 62, but GST on 5% again coming to 65 rupees. Again here, see, as it stands today, the crop is good. The sowings have been very good in Indore, Madhya Pradesh and Maharashtra also. It was good, and there should be a good the production of soybean meal as such. Soybean. But however, a lot of things depend on that. Number one, the policy of the government, whether how they are going to allow the imports or exports, whatever it is. And even now there seems to be a lot of holding taking place. If the new crop comes in the month of October, see, normally in September, October, November, you get the new crop after the sowing. So when the new crop comes, the prices should come down, but that is again, I would say, we have to sit fingers crossed. It's $1 million question. How much price would come down? It will be around, see, if it settles down around 62, 61, 62, that should be a good price next 3-4, next rest of the year. And coming to the wheat flour, it is something, some surprising things are happening in wheat trading and wheat exports, wheat flour, wheat products and all. The government has been changing its policy often. Once they said no barriers for export of wheat and wheat products, then within less than maybe, I think, 20-25 days, they imposed ban on export of wheat as such. Then they allowed that all wheat can go except certain specified wheat like maida and all should not go. Then again they said the ban was put on that also. Now the government has come out with a policy that there is the inter-ministerial committee has been set up, that every export is allowed, but subject to clearance from this inter-ministerial committee. So they have given the responsibility to that. So like Commerce Department, Agriculture Department or Finance Department it is consisting of these representatives. So they decide how much should be exported, and on case-by-case basis, they decide permissions are given. Only against that permission it is allowed to be exported. So the situation is quite fluid, dicey, and we don't know how things is going to take shape in future. But however, we are seeing that with the restrictions, we hope that the government will not allow much of exports and bring it around 30 rupees level. 29-30 rupees is a expectation of the price stabilization in the next rest of this year. I hope that is going to be the wheat flour price. Coming to other prices, generally they are all high packaging material, everything is going up, but the chances of coming down is very, very, very remote. But with all that, we are trying to price matching, we are trying to represent the government for permitting us to something like clearance for increasing the price. We already, the feed manufacturers are discussing with the government. You remember last time when the price was increased by 2 rupees 56 paise, has to be rolled back as an instance of the government of Andhra Pradesh. So at that time they permitted us to come for review again in August. We have now approached the government for review and permit us to increase the price. We have to wait what's going to happen, how the government decision is to be taken. That we have to wait and see. That is with regard to if fortunately if we can get the price increase approved, cleared by the government, then I think we should be able to bring back the margins much improved than what we have shown now in the last last quarter. That is the scenario of raw materials and sales price, Mr. Agarwal.
Sure, sir. Thank you very much for the detailed answer. Thank you.
Thank you, sir. Next question comes from Nitin Avasti from InCred Equities. Please go ahead.
Hello, sir. I have a few questions. The first question is, the inventory that we had during closing of the financial year, which is Q4, has all that inventory been exhausted in the current quarter?
Yeah, it is exhausted. Okay. We can actually just you could go to the next question. Meanwhile, we will try to figure out what is the inventory at the end of Q1. Okay.
Okay, sir. The next question is, you have stated the fish meal prices as of today, soya meal prices as of today. During the quarter, what was the fish meal prices booked, roughly around per kg, and soya meal prices?
During the quarter, the average price of fish meal was just a minute, one second. One second, Nikhil. Q1 23 was wheat flour was 26 rupees. Fish meal price was 111. And soya price was 66. Okay,
sir. Thank you, sir. And the next question I have, sir, right now wheat prices seem to be a major concern. And our wheat quality that is there in India is superior, the prices of that is higher. So are we petitioning the government as an industry to allow us to import GMO wheat, because that will be available at a much cheaper rate?
See, Mr. Nitin, this is a question, it's a $1 million question, because India is the second largest producer of wheat in the world. So we are producing a lot of wheat, and in fact we are in a position to export. I mean, is it wise? There is a petition already with the government to import, but it has got, I think, a customs duty of 40% on the imported wheat, if I am not wrong, just subject to correction. So it has to be balanced. See, the wheat production in India is very good. we are getting sufficient wheat production, not only for the consumption, for also to the stocking levels. First, normally the standard of the food policy, about 3 years, we have to store it for that. So we are getting sufficient wheat in the country. As you rightly said, definitely GMO seed much better than the non-GMO seed which is grown in India. But however, if you permit the import, what is going to be the impact of that? So the soybean meal price, when the import was allowed, so we booked the order. When we booked the order, we thought it will because it is in dollar terms, the price is. When the dollar price was around 65-70 rupees, we booked. Now the dollar price is 80 rupees, 79.80. So automatically the prices has gone up. So this is an unknown fact. Of course, we can hedging and all is there, but in spite of that, hedging cannot happen unless we know the exact date of the arrival with the maybe plus or minus 1 week. See, but the thing is that the imported raw materials, whatever it is, soybean meal or wheat, it is again subject to so many factors and the policy of the government. The first, initially, we thought that the government will permit import, but they may waive the customs duty. That was the talk in Delhi corridors. It was 40% customs duty we will waive so that it can be imported. That's what they said. So I don't know, because it is very difficult to guess what is going to be the wheat import policy of the government. But as of today, the wheat production is good. But for this, export, things would have been very good. It was there. We were getting at 23, 24 rupees, 22 also was there. 22, 23, 21 we bought. Suddenly it has gone to 32. 10 rupees it has gone up. Why? Because of the policy that suddenly the government taking a decision to export the wheat and wheat products. Many big houses have cornered the entire first harvest of wheat and stored it in their warehouses. And there is a artificial, the shortage is created in the market, shooting up the price. So such things, if we don't know, it can be controlled, definitely I think the prices should be around the ideal prices of 27, 28 rupees should be the very comfortable price for Indian wheat. And the imported wheat, wheat with this one is not that advantageous as of now because of the currency fluctuations. It is not good and it takes a lot of time. Freights are good, freights are very high. So that is the reason I think the government has strong power to stabilize this industry by proper policy and not allowing the holders not more than 1 month stock or something like that. The trader should not hold more than 1 month stock or something like that. Some regulations can be brought, so this can be stabilized, and we hope the representations are being made and this will be stabilized around 28 rupees. Okay.
Yes, sir, got it. Just the last question from my side on the industry. We are seeing a very disturbing trend in the import-export data, which is India has started to import raw shrimp from Ecuador. The quantity is very small as of now for processing, but it's just that it's a very disturbing trend. What's your outlook on that?
Niklesh?
Hi, Niklesh. Could you repeat the question? I couldn't hear for the last part. Hello?
Hello.
The last.
Yes. Yes, of course. What the import-export data is showing us is that India has started to import last month shrimp from Ecuador, raw shrimp for processing. And this can, hamper our whole company and the complex of the feed industry. Maybe the processing industry is good for that, but for the feed industry, this could be very, very negative. So your thoughts on this, like, do you see the trend getting stronger? Do you see it getting more and more viable? Because if it happened last month, it was definitely viable. But you know the industry better, hence what are your views on it?
Exploratory thing, Nitin, I don't think it's a long-term risk because Ecuador's product as such, a lot of it was going into China, so maybe some of the rejected countries came into India, but there's no trend as such to import products from Ecuador and reprocess. It's not, I think maybe it was just product that came, which was rejected from China and came into India because it's closer. But I don't think it's a foreseeable risk right now.
Okay, sir. Thank you for answering all the questions.
Thank you, sir. Next question comes from Deepesh Kashyap from Equirus Capital. Please go ahead.
Yeah, hi sir. Thanks for taking my questions. Sir, wanted to check on the guidance because I think you said the feed sales in this year will be around 5.7 lakh tons. So just wanted to check whether that's the calendar year you're talking about or the financial year 23?
It will be calendar year only. We go by calendar year.
Okay, got it.
Yeah.
So obviously for FY23, the growth can be better because the new capacity is going to come and obviously is the main point, right?
Yes, yes.
Got it. And sir, also given the current raw material prices that you talked about and the I think 2.5 rupees rollback that you did in June, July, right, of the feed price. So how are the current margins standing? Are they like better than the first quarter or even worse than that?
No, I think it is more or less the same because we thought that 225 would take care of the increase which has happened, which has to be rolled back because of the government. So it has gone back to the same status. The margins did not really affect much because some slight decrease in some of the raw materials during the thing has taken care of that, and more or less it will be 5 to 10% variance only it would be there. It will not be more than that.
Okay, so any try by the industry to increase the prices or the government will not?
Yeah, we have. That's what Deepesh. We have approached government. Because you know that there is actually the government is taking an active part in deciding these things. So last time when we increased it, immediately there was a lot of representations and from the farmers and all to the government, and the government called all the feed manufacturers, had discussion, and they requested us to roll back the price with an assurance that they will look into the matter again in August. If the prices don't really come, they will allow some increase and all, something like as a discussion went on. So on that basis, we have gone to approach the government again to permit. So whatever if the government permits to again come back to the pre-rollback price, that would be good. That will really help us a lot. So with this raw material prices stabilizing and all, I think we should be much better in Q3 and Q4.
Understood, sir. Sir, and also on the US FDA part, like you talked about, so I just wanted to clarify because the voice was breaking, that the normal shipments have started or still you are waiting for some approvals for the value-added products?
No, see, now I think Niklesh will
So, hi. So the recall has been terminated as such. So I think the scare or the requirement of another recall is eliminated. So that's one point. On sending the cooked shipments, we are not banned from shipping cooked products. So we continue to ship some cooked products to the US, but we have an import alert which makes the FDA stop all the and test the product, which just increases the turnaround time. So right now we submit a petition to be removed off the import alert with all the necessary documentation. It was submitted earlier this month. So we're waiting for FDA to review it, and they take their time. If they have questions, they come back with questions and serve on first basis. So we're hoping that in the next month or two, we are removed of the import alert so we can scale up shipping to the US. Right now, the turnaround time is high, so we kind of step back.
Understood. And lastly, Nikhilesh, we know about the supply issues that are happening in India, but any color on the demand? Like, do you see any pressure on demand from US or Europe?
The demand is, the overall demand, I would say, is mildly towards the weak side, but we need to see how the winter sales, the Christmas and New Year sales go. But the price is okay. We don't think it's going to drop further. The demand for certain sizes are good. We see it picking up in the third and the fourth quarter.
Got it. Thank you, sir. Thank you and all the best.
Thank you, sir. Next question comes from Ankur Arora from HSBC. Please go ahead.
Good evening, sir. Just one question on a slightly longer term basis. Our market share in the feed business has been stagnated around 50% for a while. We have been gaining market share right from 2011-12 all the way till 2018-19 and all, and then it has stagnated at the level of 48-50%, which is what you are maintaining for this year as well. What's our medium-term outlook on that? I mean, do we think that probably 50-52% is probably the kind of peak which we can reach, or do you think there's a scope for raising it to say 60% or something? How do you see that, and what's the internal challenges and internal target for that?
Yeah, see, the target is always to go up to 60% if each year, but we cannot target like that. But the question when we said 40-50%, see, when the overall market consumption itself, feed consumption is coming down, where if you look at that, it will be more than that. So the 48-50% is the standard that is the minimum. So we always, our endeavor is to always go for another 2-3% by conversions. Now, I did not want to commit anything on this because there are a lot of conversions going on. So we expect that it should cross. That's what we are expecting in this year. But because the first crop had the expectation been achieved, we would have comfortably crossed 50. But the second half, now the second season, if we are able to, we are hoping to make it up and bring it to above 50%. So that we have put a target, another 1 or 2%, 2% we have put the target. We should be able to achieve it, but that will be known only after Q3.
Sir, the question which I'm trying to understand is, there are challenges which is saw in the first half and the first season was there for everybody else. The question really becomes the conversion. How much market share you can move from other people to yourself, right? The overall industry growth is what it is. You can't change the industry growth, but how much market share you can capture from the competitor is what really it's in your control to some extent. How are you looking at that? What are the steps which being taken to capture higher market share from the competition?
Mr. Arora, let me tell you. See, there was a situation in the first season when we were unable to supply feed because the expansion plant was under progress. There was some unexpected, delays. So that was the reason why we could not increase this. Apart from the market, this was also one of the reasons. But because we could not meet the demand on a day-to-day basis, we were awaiting. Because there were certain reasons why the project also got delayed because of the shipments. Some capital equipment did not come in time, some reason or the other it got delayed. Had we completed 1 month before, then now we were September with the government. See, we are ready in the August itself, we are ready, but we are waiting for certain government approvals. In fact, suppose had we completed couple of months early, then things would have been, the first season also would have got a good percentage of the market, and we are definitely in the second season we will make it up. It will be definitely more than 50%.
So by that logic, keeping in mind the second season, you will have the full capacity available, 175,000 additional would have come in. In FY23, that is, we have whatever market share we have, but in next year, you expect to reach a market share which is significantly higher than the current year number?
Yeah, see, the market share always, our market has, keeps increasing. In fact, that's what I'm telling. Maybe we'll be able to more clear on conversions that are taking place. Just now, we got an information that a lot of farmers are coming to our feed now in this fresh season now, which started, second season. So when there is, like in the industry, what happens is the farmers, supposing we get about 40 farmers will come to our side, there will be 5 or 6 farmers going out also. See, we have to take net. So the percentage always keeps varying. So we will know at the end of the season what is the total consumption of the total area and how much was Avanti feed. Then we will be able to determine the exact percentage. So what we are expecting is that it should be more than 50, maybe 52% by end of the second season. That's what we are expecting.
And similar momentum will be hopefully maintained in the next year as well, right?
It is always our endeavor, no? We are always maintain. That is the reason why we maintain the quality of the feed. We maintain the technical services that we provide to the farmer, and it is always there. But certain things do happen when just as we expected, we get the expanded capacity available. Production will be available in the first season itself. But it was not so. The first season is over. We could not take that advantage of the first season. There was a demand. See, though the overall, that's what I am saying. So, though there is an overall decrease, the product for our demand for our product was more. That's what I am saying. That's where that triggers it. Increase in 50%. What you are saying about 52 or 53%, it will happen only if you make up that increase.
Understood, sir. Understood. Thank you, sir. Thank you very much.
Thank you, sir. Next question comes from Aditya Soni from Purnamta. Please go ahead.
Hi, thanks for taking my question. Am I audible?
Yeah. Yes.
I just wanted your help in modeling the cost structure. So we generally know 80% of our sales are COGS. So in that, can you just give us the breakup of raw material cost of soya bean, wheat flour, and fish meal? Like what percentage is each of them?
Yeah, see the fish meal price will be around 107 rupees. I mean percentage I cannot give you. No, that cannot give. I can give only the price, but not the percentage in that overall cost.
So, sir, in your last quarter, you told that 60% of your raw material cost is soya bean and wheat flour. So, is my understanding correct about that?
There are 3 raw materials. One is fish meal, other one is soya bean meal, the third is wheat flour. These 3 products constitute significant part of our total cost of production. That is available. No, you can look at our financial statements. This information is available.
No, I just wanted to know what percentage is each of them. My second question
we can't reveal that. No, that is a formulation which we differs, and it is a confidential information. We cannot give it that breakup.
Sure, sir. I understand. My second question is that you are very confident of the feed plant being operating at 100% capacity, the new feed plant, 175,000 metric ton. Do you still feel the same?
Definitely. See, 175,000, the full season. You have to take into account the season-wise. You cannot take 175,000, the total. The production every month it will go like that. We have to see overall. See, if you take the 1 year's production, it may end up in 80%, 80 to 90%. It will not be 100%. Because off season, in the month of say April, May, June, July, August, September, October, you will have full production. When it comes to November, December, January, February, it will be less. So you have to average that. So average annual capacity utilization will be around 80%.
Got it, sir. So, sir, if I just calculate 80% for 6 months, so from October to March, so can I reasonably assume that 630,000 metric ton of volume you'll sell feed in financial year 23?
Yeah, see, definitely the target is to achieve the 630. That's what we're saying. It also depends on the consumption. What is the, supposing, as I told you in the first season, there was an early harvesting where the smaller size shrimps were harvested. So then, if the farmer allows the full season, it go up to say 20 count, 25 count, then 30 count and all, you get more feed consumption. Supposing he takes harvest, still you have at the 60 count he harvests, but then naturally the consumption will come down. So these are all the dynamics which will work on the total capacity utilization, consumption, etc. and the tonnage. The entire thing is interdependent. So we hope, see again, why he is not growing, it depends on the fact that what is the farm gate price. If he is getting at 60 count, a smaller size shrimp, farm gate price is much more attractive than a higher size, maybe 30 count or above. Then he feels that why should I wait for 30 count, because he has to use a lot of feed consumption and you are exposing to lot of climatic risks and all, diseases, etc. He says, I am getting a good margin now, let me sell. So he harvests and sells it. So this is what the market dynamics. It all depends on that. So by and large, we try to make that overall we maintain our feed sales, targets are maintained, whether by way of conversions or increasing our share in the market, new farmers coming in, conversions happening, all these things put together, we take a estimate of the feed sales.
Yes, sir. Yes, sir. Thank you. So one last question, if you don't mind me asking. Sir, so fish meal price from Q1 FY23, which was 111 rupees a kg, it has now fallen to 102 rupees a kg. And so
107,
so we have a huge,
with 102 plus 5% GST, it is 107.
So it was 111, so from 111 to 107 is what you're saying.
Yeah, correct.
Oh, that is the reason why, so there's no significant decrease yet, and our margins will remain the same.
Yes, exactly.
Sir, so decrease in, so you've taken a rollback of price increase of 2 rupees. So will that further affect the margins?
No. As of now, it won't affect. We'll have to see. Whatever you are seeing is only that effect. It may not affect further.
Okay, so we are going to maintain margins this quarter.
Yeah, you are going to maintain the margin.
Okay, sir. So one last question I had to ask. So I was just looking at earlier analyst also asked the question. But if I just look at the growth of Ecuador shrimps, they're growing at a very fast rate. So don't you think eventually Ecuador shrimps will start replacing Indian shrimps and take away the market share from us?
Niklesh, can you answer this?
I would like to say that India has been for the last decade the most competitive producer of shrimp in the world. Our shrimp prices are more competitive than countries like Vietnam or Thailand. So I think the risk would be greater on these countries than India. And yes, Ecuador's production is increasing, but again, the country is not as big as India. It does not have as much workforce as India. So I think they carve out an own niche for themselves, not replace India altogether.
Okay, sir. Thank you so much for answering my questions.
Thank you, sir. Next question comes from Jasdeep Walia from Clockwine Capital. Please go ahead.
Sir, good evening. Thanks for taking my question. So I wanted, my question is on the recent price caps which have been imposed by the AP government. So now, sir, does it mean that in future now, if the industry has to take a price increase, it has to, get approved by the government, and without the government approving, the industry cannot take a price increase?
No, it is not that. It is not a price control mechanism. Absolutely not. It is free. We can take price increase, but we always look into in a holistic approach to the entire. Because the government called the feed manufacturers because there was a representation from the farmers. So the farmers, they said, okay, in the interest of the farmers, they called both farmers and the feed manufacturers and made both of them sit and discuss and do it. But there is no control mechanism as such in Andhra Pradesh or anywhere in the country. It is a free, open market. Absolutely, there is no. But in all, with due respect to the governmental mechanism and what their interests and it's our own interest all put together, we try to accommodate them. It is not mandatory.
Got it, sir. And so you were saying earlier that to take a price increase, the deliberations with the government have to happen in August, right?
Yeah, it's already started. The discussions have started. We'll have to wait for some time. Maybe in 1 week, 10 days, we should be able to know the response from the government. Yeah, but see because the raw material prices have gone up. Definitely, we keep that the relationship. After all, in the state, the government, the farmers and the feed manufacturers, the processors are all coming under that. So we are bound by certain regulations and rules and regulations, and we have to cooperate with the government in their effort to, in the interest of the farmers, they are asking. So we have to give some value to that, and we have to go on. It is not mandatory or a regulatory mechanism that the government insists on that, okay, you should reduce or you should put the price only at this. It is not like that. But we cooperate with them because in the larger interest of the society and also the government's, endeavor to help the farmer. That's what they were doing.
And so what is your sense on the level of shrimp farmer profitability as of now, given the high feed prices?
Pardon me? I didn't get you.
What's your sense on shrimp farmer
profitability?
Sorry. Jasdeep sir, could you please be louder? Your voice is not audible.
Sir, I wanted your view on, the level of shrimp farmer profitability as of now versus past. Is it significantly below normalized levels, or farmers are making as much profit as they used to make earlier?
Now it is very, very good profits now. With this price, the prices of, smaller ships are better. They is getting more profit on smaller ships as of now. So we have to wait for bigger size also to get better price, so that there is some sort of uniformity, and farmers, we are more interested in bigger size because feed consumption will also go up. But at the same time, we have to look at what is the market global prices of bigger size and smaller size and demand for them. So as of now, the farmer is making good profit at the present price.
Got it, sir. And so my last question, sir, given this inability to take price increase in AP, what percentage of industry could be making losses as of now?
I didn't get it. No loss.
Who are making?
No, we cannot answer that question because you ask about our company, we will answer. But it all depends upon so many factors. See, if you ask me about our company, I can answer you, not about the other competitors.
Got it, sir. Thanks a lot, sir. That's all from me.
Okay.
Thank you, sir. Ladies and gentlemen, due to the time constraint, we would like to come to the end of this conference. On behalf of KFinTech, we would like to thank the entire team of AVANTIFEED for giving us the opportunity to host this call, and we appreciate the interest from the investors and analysts for the participation. Thank you, and if you need any further information, you may connect with Mr. Sahil Shah of KFinTech at sahil.shah@kfintech.com. Thank you for using Doosaba's conference call service. You may disconnect your lines now. Thank you and have a good evening, everyone.
Your conference is no longer being recorded.